Hello and welcome back, everyone, for what is going to be nothing short of another jam-packed daily cryptocurrency market update, albeit late. So usually we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the cryptocurrency markets, but also the broader markets. And we have a lot to talk about in regards to the broader markets and the crash. When you zoom out and put things into perspective, it really isn't that bad. It's just a normal day in a very high beta leveraged space, which we're going to be talking about in this video. But we're going to be talking about what happened on the kind of macro picture that saw not just Bitcoin and crypto, altcoins get smashed significantly harder. Bitcoin is still that tide that rises and sinks all ships. And Bitcoin is correlated with the traditional market. So when you have dollar strength coming in off the back end of a hotter than expected number that supports a more hawkish Fed, that is going to have ramifications for risk markets more broadly. And crypto is going to take the biggest beating out of the lot of them. And that's what we saw. Although we saw gold actually sell off just like an altcoin, which we're going to be talking about in this video. So really what we're going to be doing in this one is putting into perspective what actually took place yesterday. We're going to be, of course, looking at the news. There was two parts of the news. The first one I think everyone wants to talk about, which of course is the higher than expected jobs added to the economy in the US. What are the ramifications for that in the crypto space? Well, it strengthens the dollar because it takes out the need for cuts, and it means the Fed has a little bit more runway in regards to the hawkish kind of stance that they've taken, which in the grand scheme of things is total bullshit anyway, because we know that the eventuality and inevitability of the system is that they're going to have to print more money, which is why you need to be in assets and not the fiat systems, which is why the rich get rich and the poor get poor. So leaving that aside, let's focus on the here and now. We had a very hot job number, but we also had unemployment upticking, which is actually bad for stock markets also. So there's an interesting dynamic here, double-edged sword that we're going to be looking at. We'll relate all this to the cryptocurrency market, really explain what's happened, and also sort of reiterate just how volatile crypto is. There's a lot of leverage in the cryptocurrency space, and it is already a very sort of small, what we mean by high beta is volatile, more volatile than traditional assets space. And everything got hit yesterday on the back end of this. Of course, really, this all readjusts rates, which of course strengthens the dollar, and the dollar's at the heart of it. And we do have that broader thesis on the dollar, that the dollar is going to be rolling. So we'll be talking about a lot. Without further ado, let's break it all down. So the bull run isn't cancelled. There's some of the comments. You know, I really do believe that investing isn't for everyone. Certainly in the cryptocurrency space, investing should be for everyone, but there are people out there who I think are probably more, their emotions aren't suited to, and we're all emotional. I'm an emotional investor like every human being out there. The trick is learning how to deal with that, who really can't deal with the sort of price action that we see, but ultimately I think have failed to understand the nature of the beast that you're dealing with. And we always try and impress that on people, that crypto is the most volatile asset class to be in, period. I say that, I mean, you see some real volatile moves with the Japanese yen and things in recent times. But if that's how that's acting, you can imagine how crypto is going to act. And you need to understand that going into this space as an investor. It's not for everyone. I always say this: if you can't handle the heat, don't be in the kitchen. Everybody wants the high returns. Nobody wants to sit through the chop and the volatility that comes with those high returns. And this is why we try and put things in a broader perspective, which we'll do. But without further ado, let's dive into it all. This one is slightly later. I do apologize, guys. And let's start things off with obviously what took place yesterday. So let's go from Forex Factory first. We had, of course, non-farm employment changes. The expectations for this were 182. The prior one was 165,000, and we got 272,000. So nearly double. Was something like a 1.7x what was expected. And of course, the ramifications for the markets more broadly is this strengthens the dollar. And we saw that with this candle here, which we'll go on to. So the sort of headlines for this were US adds a much better than expected 272,000 jobs in May, but unemployment rate edges up to 4%. So I also want to talk to you about unemployment rate and the historic correlation between unemployment rate, which people often miss, and the markets more broadly. Unemployment at a low, markets at a high, vice versa. So the uptick in unemployment is actually not great for the markets also. And this is something to be watched. So it's a double-edged sword. There's a lot of double-edged swords right now in the kind of economic arena. in the sense that, yes, we want theoretically a weaker than expected labor market, which is going to put pressure on the Fed to cut rates. It's going to mean rate cuts are getting priced in again. It's going to sort of see risk do quite well. But the adjacent sword of that, or the other side of the sword, which you've got to be careful with, is the fact that we don't want unemployment to uptick, because actually markets don't do well under that circumstance. Now, I want to reiterate this again. A lot of short-term volatility and what is a broader uptrend more broadly, and we get that. We've compounded our reasons for that from a technical perspective, from a sort of macro perspective, from a fundamental perspective. This is a bull market, ladies and gentlemen. I know some people are saying it doesn't feel like that, but you have to understand, and we get that narrative derived from technically what we're looking at in the charts, and that's our base. Okay, we're not interested in the news. We're not interested in the short-term chart. We're interested in the long-term trajectory that these assets are on, and it's an upward trajectory, and even including altcoins. I did just post to my Patreons. If you want to join the Patreon, do check the link in the description and unlock my portfolio. Actually, Nvidia and what that did. Nvidia now one of the largest stocks in the world. Amazon, if you look at all these stocks that have changed the world, they all consolidate. They all have cycles within them, cyclical cycles within them. And actually, a lot of them go sideways before they sort of make it and, go on to change the world, although the foundations are there, just like we think we see with many cryptocurrencies, for a longer period than many of the altcoins have, that are really just following the PMI cycles and the 4-year cycle theory. So we've looked at the jobs report. Our broader trajectory on the dollar is that it comes down to the lower band of this channel. Okay, we think that is largely going to be led by interest rate cuts, which we are going to be having, which is going to see risk do, we've just taken it off there, it's in a nice Bitcoin orange, which is going to see risk do well. Interest rates come down, dollar typically comes down. Also, interest rate comes down. That means that people get out of yields. They go and hunt for risk. We've got a record high in money market funds. There's a lot of theory that we've compounded with this. You'll notice that the bond market got hit yesterday on the back end of this news as well. And let's dive into the weekly candle. You can see there was a bit of a gap on this one with the news. Also, yields were up, which all leans on risk. And this is where that sell-off came from. It's a bump in what is a broader trajectory road. So I'm not in the high rates camp. I don't think rates are going to spike. I think they're going to come down. I think the Fed are far more likely to step back into the bond market to support it than allow rates to go up. Because if they allow rates to go up, we have $9.3 trillion worth of debt that is set to be refinanced in the next 12 months. At what point does upping interest rates actually become more inflationary than deflationary? At what point does QT become QE, in the sense that you need to print a hell of a lot more money to sustain the debt because you've upped the interest rate on it, and it's almost completely null and voiding any kind of... I think that's a far more risky. I don't want to go into that because it's a lot more of a complex subject. But at what point does it start to not make sense to up interest rates? And I think the Fed needs to cut rates probably more so than anybody, or certainly for the US government. But this is what happened with the dollar. We've looked at this and we continue to bring it up. This is macro stuff. It's very simple to understand. Everyone should understand that there's levers with markets. They're very mechanical in how they sort of move on the short term and the more longer term. Put Bitcoin in Bitcoin orange, it's right full color. Now we've got 2 orange charts on here. But you can see the correlation, of course, and let's pop this on log, is a dollar up, generally risk. This is the short term. A dollar up, risk down. Put the S&P and everything else on here, which also sold off. Dollar rolled over. Bitcoin later than other assets because it had the whole FTX fiasco. But once the dollar sort of started to come on a downward trajectory, Bitcoin did well. And even on the short term, this is very applicable. You can see with this sort of strength that the dollar had in the recent term, this made Bitcoin go sideways. You can see as the dollar rolled, what did Bitcoin do? It went up. And with this recent sort of almost, even here, dollar up, Bitcoin, dollar down, Bitcoin up. And now with this sort of strong, it leaned on risk generally. And with crypto, it's extremely volatile because of the law of small numbers and essentially the sort of leverage that's in there. And this is why some of your altcoins got absolutely smashed yesterday. It's a deleveraging, which is good because it's those idiots that are leverage trading crypto, and you are idiots, because none of you will ever show a P&L. None of you. There's a very simple way to tell who's a good trader and who's not. Ask for a P&L of at least 12 months. They won't show it you. Because I believe, personally, this is my honest belief, you're going to make more money from a retail perspective, and I'm still somebody that is actively a trader in crypto. It's not this easy story that everyone tells you to be. And actually, I think it's a great way and they want to promote it because what it does is it takes money from retail. It wrecks you. You don't need to be leveraged in this space. If you're going to take leverage, make sure it's very light. All you need to be is an investor in assets that are going to change the world, and you'll do just fine and change your life. Everyone chases that fast money, and that's how they lose it. And this is why the space is as volatile as it is. You get agents like Roaring Kitty, and if anyone's under any... Do you really think that this guy is an overnight success story that just appeared out of nowhere and is now a billionaire? And oh, by the way, we found out that a load of funds actually bought GameStop before he made his appearance once more. The guy's an agent. And there's a big narrative to promote retail to trade out there. And there shouldn't be. You know, you shouldn't be listening to these people. Go and try your hand at it. Try it by all means. If you're going to take it seriously, you've got a very hard road ahead of you. And some people will do absolutely spectacular. The reality is most people won't. But the reason I brought that up was because crypto is very volatile. So when you have this sort of macro leaning on the short term based on data, it flushes out leverage in the cryptocurrency space. And that's what we saw. And it wasn't just Bitcoin. It was also gold. Gold sold off. I think what was gold for us down? You can see that just there. Not 82%, 3.9%. You can see gold on this. And we'll come to gold in just a second because the broader trajectory for everything is up. This is just a bump in the road and you've wobbled on your moped a little bit, you know, wherever you are. So I hope we're breaking all this down to a decent degree. Even the S&P sort of turned a little bit. The question is, what's the longer term trajectory for the dollar? And I want some answers from you guys in the comment section. We are going to start doing lives where we can ask people more broadly. My theory is that the dollar comes to the downside, and that's based on where I think things are going economically. And I think this is an environment that's going to see risk do well, which is why Stan Druckenmiller moved from, who's given us a green light here, Nvidia, down to the smaller cap stocks. So obviously unemployment also rose. The historic correlation between unemployment, for anybody that's unfamiliar, is when unemployment's at a low, the stock market's at a high. This is the S&P. Unemployment at a low, stock market at a high, and vice versa. Unemployment at a high, stock market at a low. So unemployment upticking was bad. So it was almost a double-edged. It was almost two bits of bad news. Okay, the Fed has more room. Let's pull up the Fed watch. And this is what's been going on this year, actually, quite broadly. Is how long has Bitcoin been going sideways for? Let's pull BTC up. So the dollar's been going sideways since inflation started to go sideways, which of course has leaned on risk. So where's Bitcoin? Bitcoin's been going up in this environment because markets think ahead, but it's been facing kind of, you know, challenges, if you will. This has genuinely been a period of dollar strength whilst Bitcoin's been going sideways. And with this rolling of the dollar, you can see what Bitcoin did. So what's been happening since the start of the year is we went into this year way too overzealous in regards to rate cuts. We were some of the few people that said, you're not going to get rate cuts in January, February, March. They're likely not going to come to the latter half of the year, but they are coming. And everyone was way too overzealous. And since the start of the year, with sort of inflation and a number of other things, you've had a kind of leaning, if you will. The reversion of that is going to see things go well to the broader trend, which is the dollar down. I think you're going to see further deflation. I think you're ultimately going to see bonds get a bid, and you're going to see rates come down, basically. And that's going to sort of drive everything. And this is the broader trend, which is, of course, signaled with technically what we're looking at. Let's dive over to Bitcoin once more before we dive into sort of rates and where they are. So let's go ahead and get all these off. You know, our plan for Bitcoin still remains the same. And we were looking at a short-term target, which is worth us covering, that still could be in play. This very much could square up and still play out and take us to 81,000, which gets us even further to our broader trajectory, to the upside. On the back end of this, gold got hit very hard, but we're unbelievably bullish on gold. It's done well. Give it a break. It needs to pull back a little bit. Altcoins, again, just get hit very hard as a result of things. But when you understand the broader trajectory for altcoins, is to bring Hedera, which is my largest position, by the way, and we make no bones about it, which got smashed. This is not a bad chart. Look at where it's getting a bid. I'll tell you what it looks just like. Anyway, I digress. We can cover altcoins at a sort of later date. So really, you've had a readjustment. So the first rate cuts, I think in September, they're more likely to, or no, actually, now September's cuts being sort of priced out. And this is what bolsters the dollar, by the way, but November's the first cut with the more probabilities. And even then, it's close. And this leans on markets. We've got economic data to contend with. It's just a deleveraging of the cryptocurrency space. I was going to talk about Robinhood and what the ramifications for that are, but I've rambled on for 15 minutes now. So I hope that's sort of given a little bit of clarity in regards to what's happening right now, what happened last night. It always seems to happen on a Friday. It's just a sort of deleveraging of the cryptocurrency space. You've had some, what's deemed at the moment, but even, adding jobs to the economy really isn't a bad thing. But because of what it means for interest rates, it is. For risk, which needs that weak dollar and so on and so forth. So there's a lot of double-edged swords at the moment, but I hope that's kind of put into perspective exactly what happened. I do apologize, guys, for the later video. Just had a lot on today. We'll be back to normal tomorrow. We're hopefully back to normal more so since we've been away for the past 9 days, sort of venturing around Europe. Studio, very much there. We're just sort of in between at the moment. And if you do want to become a Patreon, check the link out in the description. We've got a meeting tomorrow and we're going to go into things in a lot more detail. But I'll see you all in tomorrow's daily market update at 1 p.m. normal time. And on that note, I'm going to love and leave you. Thanks a lot for watching. Let me know your thoughts in the comment section as always. And I'll see you all in the next one. Have a smashing Saturday, guys. See you in the next one.